Hey everyone, I'm here with Melissa. We are here for our June mortgage talk. Super excited because the market is always changing. There's always some things happening. There's always questions. So we're here to try and debunk the myths and give you the information that you need and the things that nobody is telling you about. We will be the ones to do that. So I think we're going to start off today, Melissa, by talking about pre-qualification versus pre-approval, because I get this so much with buyers and they're like, oh yeah, I'm good, but they're really not. So do you want to maybe dive into what the difference between that is? Because there is a big difference and they need to know and understand what the difference is.
Sure. So a pre-qualification is where you would go to like your bank's website, or even sometimes when you just call in and talk to somebody, they'll ask you a few basic questions and say, "Oh, you could potentially afford this." They haven't collected any documents, they haven't reviewed any of your information. They're just essentially taking your word for it. So again, if you were to go to your bank's website and like type in a few details and see what you could qualify for, that's essentially what a pre-qualification is. It just takes the information you provided and says, if all of this is true, then you could afford this. A pre-approval means we collect all of your documents, review everything, pull your credit, look at everything with a fine-tooth comb, and then we say, okay, based on all of the documentation that we have available, you could be approved for this. So it is a far better route to take if you are purchasing a home, because often, and I've had this happen to many people, they've gone and done the pre-qualification and they think, oh, I can be qualified for 600,000. But then when we actually look at the documents, they've got a car loan that they didn't think impacted them, when really it dropped how much they qualified for, and now they only qualify for 450. So super important, if you are going to be purchasing a home, to have someone actually review your documents, actually pull your credit, and issue it a real pre-approval.
Yeah, and that means like all of the documents, everything's being verified. Yes, it's work. Yes, it's super annoying because Melissa's going to ask you, or your mortgage person is going to ask you for pretty much everything except for a blood sample.
Mm-hmm.
But that's part of the process. And I don't recommend, like, even if you have gone through these bank online pre-qualification sites and it says, oh yeah, 650, and you're even being conservative and saying, well, we would only want to spend 550. I still would not start shopping for houses until you have something concrete, because maybe it's on the good side and you could maybe potentially afford more, or on the lesser side. So there's really no benefit to you using these pre-qualification tools. Just go and get it done, rip the Band-Aid off and do the work, because once it's done, you can get a rate hold. So if things start going squirrely and rates start going up, which we don't know what's going to happen in the next week, with rates and stuff, and they're different each week, as Melissa always talks about. So locking in at a rate for 120 days or whatever is going to help you just have that stability in your buying process. So
One thing I wanted to add is that in terms of credit checks, so like when you're doing a pre-qualification, it doesn't look at your credit at all. Or maybe you've looked at your credit report through your bank's like online portal, which typically those use TransUnion. For the purpose of mortgage lending, we use Equifax. And for, again, the purpose of mortgage lending, it looks at different factors, different risk factors over a longer period of time than a regular consumer report does. So you may think your credit is great, but this looks at a different time frame. So it's important that someone actually reviews your credit report for mortgage lending before you actually make any offers or start looking at houses. We've had instances where people thought their credit was great. They looked online, it looked fine. But then when we actually pulled it, we found things that were incorrect on their report that needed to be fixed before they could move forward. We were able to help them facilitate that, get it done in a timely manner, and then they were good to go. Had they not done that beforehand, they would have put in an offer and they would have really struggled to get across the finish line, because sometimes those things can take a couple weeks to do. When you're in an active purchasing situation, you don't have a couple of weeks to,
No.
to iron out your credit report. So super, super helpful to deal with those things beforehand. And like you said, sometimes people qualify for more than they think they do. There's different types of income that we can use to help you qualify. A lot of people don't know they can use their child tax benefit as income to help them qualify. So if you weren't aware of that and you just put in your base salary into a pre-qualification tool, that number is going to be completely different than what we come up with.
Right. Yeah, it's super, super important. Just to do and the thing is I get people calling me and wanting to look at homes. And the first question that comes out of my mouth is just by default is, do you have a pre-approval in place? And they say, no, we're just starting to look. Well, no, we need to get this in place before we start looking for houses. Yeah. Not only, is my time valuable, but so is yours. So it's an important element to make sure that that you do the steps in chronological order. And a lot of people don't like hearing that. But if you're going to actually buy a house, you need to do it the right way. And so when the professionals are telling you this is how we need to do it, we're not saying it to be mean or rude or, whatever. We're doing it because this is how it works the best.
I find people try to avoid the financing part as much as possible. No one wants someone doing a deep dive into their finances. I get it. Yep. It can be super unpleasant, but we do try to make it as smooth and painless as possible. We don't ask for anything more than what we need. And we try to keep it as easy as we can. I know it's not pleasant, but it absolutely needs to be done prior to looking at houses.
Right. So when someone's ready to get pre-approved, what do they need to walk in the door with? Let's start with like regularly employed buyer.
Sure. So, having a down payment is super helpful.
And the deposit.
And your deposit easily accessible is a really great first step. So, there's different ways to kind of like bump up your down payment. Sometimes there's like different programs offered through different municipalities, but generally speaking, having your down payment in an account that we can show the history of the funds is a great first step. Having access to deposit funds, those are two different things. The deposit can be counted towards your down payment, but it's not the same. So having that money easily accessible, also great first place to start.
If it's being gifted, I know you may have been already going to talk about that, but if the down payment is being gifted, that money should be in their account well in advance, correct?
It depends. We can get away with it not being transferred into the account, but usually you'll need to take a gift letter from whatever bank or whatever lender we're using. So we can't give you that templated gift letter up front. We have to wait until we have an approval in place with a lender. And then we would give you the templated gift letter that whoever's gifting you the funds would need to take it into their bank and get it stamped. It's a bit more of a process. So, if the funds are transferred into your account in advance, that makes it easier because then we can just show the history of the funds. But it can still be done if it's not been transferred. Okay. Gifted funds are usually fairly simple unless those funds are coming from overseas. There's a few separate steps in there depending on where it's coming from. But generally it is just a gift letter and then showing either the funds hitting your account or getting that gift letter stamped by the bank.
Perfect. Okay.
So then in terms of employment documentation that we generally need, so a letter of employment dated within the last 30 days, ideally if it can be signed by somebody in person in ink, that's the best way to go about it. If it's electronically signed, we can still accept it, but sometimes we require other documents too. We need your most recent pay stub, and then we usually collect your last 2 years T4s just in case there is other income there, perhaps like bonuses or commission or something. We can average that out to get you possibly a higher annual amount that we can use. Then in terms of like other documentation we might need, we always need to have 2 pieces of ID. One needs to be government issued photo ID, so like a driver's license or a passport. and then we'll need a secondary piece of ID. This allows us to pull your credit. And I mean, if you're a first time buyer, sometimes that's like all we need, just history of down payment funds, employment details, and that's it. If you do own another home, then there's a bunch more documentation we're going to need. We'll need like a mortgage, your most recent mortgage statement, a snapshot of your current mortgage balance, current property bill, property tax bill. Sometimes we need your home insurance policy. There's other stuff that gets added there, but generally we really just want to see income. We need to see ID so we can pull your credit and look at what that looks like. And then we need to show the down payment and where it's coming from. So if it's not gifted funds, we need to be able to show 3 months history of those funds in your account. So when we're asking for bank statements, you cannot take a highlighter or a black marker and like cross things out that you don't want us to see. You can't filter things to show specific deposits. We need every single page and every single transaction within that 3-month time frame. Even if it's a blank page, we still need it because the bank doesn't know that it's a blank page or whatever lender it is we're sending it to. So all transactions, we need to see all corners of the pages. We need to see your name, account number. We need to make sure that it belongs to you. Any large deposits that are not pay related, over usually it's like $2,000 or so, we need to be able to explain where that money is coming from. We have anti-money laundering laws and anti-terrorism financing laws. So we have to be super diligent. And it's not just us, the banks have to follow the same protocols. We have to be able to show where this money is coming from and make sure that it's legitimate.
Yeah. Yeah, and I know things are a little bit different with self-employed people. A lot of times I'll get people asking like, I'm self-employed, I'm not going to be able to get a mortgage. You know, I just started a business a couple of years ago. But the thing is you can still qualify and get approval for a mortgage, even if you are self-employed and for less than, I think, 3 years. It's just a matter of being able to prove and to show your income. Is that right?
Yeah, so it depends on how you claim your income. It depends on how you are self-employed, whether you're a sole proprietor, whether you have an incorporated business, whether you have partners, or if you're just in it by yourself. Like there's different ways of looking at it depending on how your business is set up, how you pay yourself from your business. It depends on how much of that income you write down. If you write your income down really low, but you have a really strong down payment of 20% or more, we can usually get you approved with an alternative lender. Yeah, it's a little bit more expensive. Interest rate might be higher. You'll likely have a lender fee. I may have to charge a broker fee depending on exactly what this looks like, but it's kind of a balancing act. You have to decide whether it makes more sense to pay less money in taxes and a little bit more money for your mortgage, or you pay less money on your mortgage, but you pay more in taxes. So
Right.
it's just kind of deciding which is more important to you and what makes more sense financially. So that's where it's really important to have a really good accountant on board as well, so that when you're filing your taxes, you can say, look, I'm planning on buying a house in the next 2 years. This is the kind of income I'll need to show for the kind of property I'm looking for. Does it make sense to pay those taxes, or does it make more sense to pay X amount in interest? And I can help calculate the difference in interest for you so that you can take it to your accountant and say, this will be the difference in interest I'll pay on these two mortgage amounts. What makes more sense tax-wise?
And I can vouch for that as a self-employed person myself. I went through this. I know the mistakes I made, and I highly recommend you talk to your accountant and make sure that they do know your future plans, because it does make a big difference, especially if you are a prec as a realtor. I cannot stress it enough to make sure that you are communicating with your accountant on strategy and income and how you're paying yourself and all that stuff. It's super important. And I had no idea until it was too late. So, in terms,
an expensive lesson to learn.
yes, for sure. Now, we will, if anybody has questions, by the way, we are live right now. So if you want to jump into the comments below, we will see the questions and we will answer them. We have a few minutes, but we also want to make sure that you understand the financing condition. So as a real estate agent, I never recommend you going in with an offer on a property without that financing condition, unless you have the cash in the bank, then that's not a big deal. But if you are getting a mortgage on your property, a financing condition is a non-negotiable element to your offer. Right now, we are seeing 5 business days. I think, Melissa, for me, what I'm seeing is pretty standard. I don't know how backed up lenders are right now, but I think 5 days is pretty good. Would you say?
It depends on the lender specifically. Some are still very backlogged. Others are okay with the 5 business days. The reason that this is super, super important, yes, we can do the pre-approval beforehand. Yes, we've looked at your finances and we think everything is fine. However, an approval is also based on the property. And we don't always know if there is something behind the scenes that we're not seeing about a property. So sometimes lenders will have like do not lend lists for specific properties and property types. And if you've put an offer in and you're not conditional on financing, and now you're firm on this purchase, and for whatever reason, lenders do not like this property, you're in trouble. You
Or
could get
the appraisal comes back different than or below what they are
and this has
purchasing.
happened for sure. So super, super important to make sure that you have that protection in place. 5 business days is usually good. However, when I do the pre-approval, if there's something like wonky going on with your situation, or if there's something that we know for sure we're going to need more time, it's likely going to require an appraisal. We know appraisers are backed up right now. We're going to let you know as the realtor as well as the client, hey, we're probably going to need 10 business days on this one because of the specific property type or because of this specific reason. Now, we don't always tell the realtor what the specific reason is, depending if it's like finance related and maybe it's something to do with their credit or something like that. We will tell them and they can relay that information to you if they're comfortable. But if we need more time, usually during the pre-approval stage, we can tell you so that you'll know when you're putting your offer in how that should look.
And sometimes, so when you have a really good realtor and you need an extension and there's some negotiating needed for this because maybe there are other people interested in the property and they want to go ahead with somebody who's going to firm up the deal quicker. Sometimes you have to get creative, but asking for an extension is okay. You can ask if your 5 days is up and your financing condition is still kind of not wrapped up. As the realtor, I can do the forms for you to ask for an extension. We can ask for a couple of business days. I usually want to communicate with the lender or the mortgage professional that you're working with and saying, okay, we don't want to be asking for multiple extensions. Let's just try one more. How many more days do you think you need? And then we'll go with that and hope and pray that that's enough. And sometimes agents will push back and say, you know what, we have 3 other really interested buyers. We do not want to extend because we just don't want to lose out on a qualified buyer, because if this falls through, then all these other buyers go and find something else, then we'll be left with no buyers. Yeah. So there is things that you have to consider in terms of, doing this. So an extension is doable, but getting it right off the hop is kind of good too. So if you think you might need more than 5, then go with a 7-day or a 7-day conditional period, and you should be safe. But as long as you've got good professionals in your corner, you're going to be guided in the best on the best route for you, and you'll be safe during the process.
So there's a couple other things I wanted to mention about the financing period and also how we choose lenders. So in the financing period, it's not just a matter of receiving an approval during that time, because any approval you receive is going to be considered a conditional approval. So there's going to be a list of items that we need to get checked off by the lender in order for them to fund your mortgage. So for example, they'll want to see your pay stub, your letter of employment, all of the documents that we've collected. They need to have time to review those documents and sign off on them, saying that they've accepted them before that condition is fulfilled. So it's not just a matter of getting the approval. We want to make sure that the lenders had a chance to review all of those documents beforehand, or at least as many of them as possible. So gold standard is really for us to reach broker complete during that 5-day conditional period. So that means we fulfilled all our broker conditions. You can feel confident that you're in a really great spot for your financing. We will never tell you to remove your financing condition. We will say you're in a fantastic spot. These are the risks moving forward. If you're okay with them, let your realtor know and you're good to move forward, but we're not allowed to tell you to remove your financing condition. So that's something super important to know about that time frame. It's not just the approval part, which is something a lot of people don't really understand. I will go through a commitment package with somebody, and then the next day they'll be like, hey, are we good to remove our financing condition? Our realtor's asking. No, we want to try and get more conditions fulfilled before you do that. That gives you the best possible chance of this mortgage funding in the end.
Yep. So while we wrap up, we do want to offer you guys a cheat sheet in terms of like the forms that or not the forms, but the documentation that you need for pre-approval. If you guys want that, please comment below or send me or Melissa a DM. We'll get it over to you so you have that. So you kind of, if you're just in the preparation stages and you're thinking about you're wanting to buy this year or next year and you're trying to just get your ducks in a row, being prepared is going to make it so much better for you and so much less stressful, because when you decide to jump into buying a home and then you're being asked for all of these things and you haven't done your taxes in 5 years, that's going to be a problem. So
100%.
You need to make sure that you have everything ready to go, and you have access to all of this documentation that you need. So if you guys want a copy of the cheat sheet for the pre-approval, please let us know. We'll provide that to you. And is there anything else, Melissa, that you would like to add? I do know that we have an interest rate announcement coming up next week. What are your thoughts on that? What do you think it's going to happen?
I'm hoping they hold again. I'm crossing my fingers that we don't see any increases. I don't know how much longer we'll get away without having any increases. Inflation's been ticking up. The price of oil is still very high. I don't know. A lot of people are kind of split on what will happen. So we'll see.
And I did see that we are officially or technically in a recession right now.
Yeah. So I mean, we'll have to see what happens. It's a tough call, but I will be keeping an eye on things and continuing to read the inflation reports as they come out, and any guidance or any information that's being provided. I stay on top of, and we'll see what happens. I'll keep you updated.
Yep. And follow Melissa on social media. What is your handle, Melissa, so people can follow you so that they can keep up to date with all this stuff?
So on Instagram, it's just Melissa Kuchepa _mortgage agent. And then on Facebook, it's just MK Mortgage Solutions.
Perfect. So yeah, head over to socials, follow Melissa so you can stay up to date on all that mortgage stuff. I do not stay up to date. I rely on people like Melissa to keep me updated because I have my own stuff I need to keep updated on. So anyways, Melissa, it's always a pleasure having you with us. And as always, if you guys have questions, shoot them in the comments below. We'll make sure that we address any of the questions that you might have. And if you want the cheat sheet for the pre-approval, let us know and we'll send that over to you too. But we'll see you.
Thanks again for having me.
That's crazy. July.
Time goes fast.
Yep. Have a good day, guys.
See ya.
That's so funny. The cat